For like the last few years, the entire conversation around AI bottlenecks has been just totally obsessed with hardware.
Right. It was this frantic global treasure hunt for silicon.
Yeah, exactly. Companies literally fighting tooth and nail just to get priority access to GPUs.
We basically treated microchips like the new oil.
We did. But if you look closely at what the largest tech giants are actually prioritizing right now, it's wild. There's this dramatic shift.
Because the bottleneck isn't just securing silicon anymore.
Exactly. It's finding enough raw electricity to keep those chips running. I mean, we are talking about power density on a scale that our current national grid is, frankly, struggling to even comprehend.
Yeah, an AI server rack draws exponentially more power than a standard cloud storage rack. It's a literal physical constraint.
You can stockpile a million advanced processors, but
But if you don't have the megawatts to power that constant computational load, you just own a very expensive, very quiet warehouse.
right. Which brings us to Oklo. It's a pre-commercial nuclear energy startup, and their recent hyper-volatile stock performance is, a perfect microcosm for this whole infrastructure story.
It really is. Bleeding-edge tech promises crashing headfirst into harsh financial realities.
Welcome to Market Pulse Daily, everyone. I'm so glad you're joining us for this market analysis.
Yeah, thanks for tuning in. And hey, before we get too deep into the charts and data, we want to give a quick shout out to VIP Algos.
Absolutely. The VIP Algos affiliate link is right below in the description. Just remember, VIP Algos is strictly for educational chart analysis, is not financial advice, and it doesn't guarantee profits.
Right, trading inherently involves risk, so be aware of that. You'll find our affiliate disclosure down there as well.
Okay, so before we dig into the mechanisms of Oklo's tech, we need to note a specific detail from our research. There's a federal initiative mentioned called the Trump effort to speed new nuclear reactors for AI.
And we just want to be crystal clear with you, neither of us is taking any political sides here.
No, not at all. We aren't endorsing any political figures. We're remaining strictly impartial and simply reporting on the existence of this government program just to understand its structural impact on the market.
Exactly. Our focus is entirely on the data and the capital flows.
So let's look at that raw price action, because it is staggering. Currently, Oklo is trading around $44.50.
Right, and it hit an intraday high of $47.51 today.
Yeah, up marginally. But you zoom out, and wow, it is a brutal downtrend.
A massive destruction of capital.
The stock is down 77% from its 52-week high of $193.84, which was back in October of 2025.
Which is just a massive fall.
It recently hit a 52-week low of $39.53 on July 17th, 2026. Now, the charts show a bit of a bottoming structure, like it's attempting to bounce back.
Right, the volume is shifting.
But I look at this and I just see a deflated tech bubble. Like if a company loses 77% of its value in less than a year, doesn't that usually signal a failing business model?
Well, you have to separate the company's operations from the macro environment. Oklo didn't drop from 193 to 39 because the reactors failed.
Because they don't even have commercial reactors running yet.
Exactly. They're a development stage pre-revenue company. So in a risk-off market, when capital gets defensive, institutions sell speculative tech first.
Right, the stuff where cash flows are years away.
Yep. Investors pulled capital out of the futuristic startup and parked it in safer assets. It had nothing to do with Oklo's actual technology.
But the narrative is pivoting now, right? The momentum is shifting back to risk on for this specific sector.
And the evidence is in the volume. The 10-day average volume for Oklo has spiked to over 8.16 million shares.
Which is huge. You don't see 8 million shares trading hands from retail day traders.
No, that liquidity is a structural footprint. It points to institutions stepping back in at this lower valuation, basically betting the worst of the sell-off is over.
So what triggered that institutional volume? It didn't just materialize out of nowhere.
No, there was a massive catalyst on July 21st that completely altered their market positioning.
Oklo officially joined that federal nuclear effort alongside major tech hyperscalers, specifically Microsoft and Nvidia.
Right. They are partnering to accelerate AI data center power plants.
It's insane. The company designing the most critical AI hardware and the company building the largest software empire, teaming up with a pre-revenue nuclear startup.
Well, the mechanics of AI explain it perfectly. AI training runs require baseload power.
Continuous power.
Exactly. If a massive data center relies on intermittent renewables like solar or wind and experiences even a millisecond drop in power,
A whole training run is ruined.
tens of millions of dollars just corrupted or destroyed. These giants absolutely require carbon-free, but more importantly, reliable power.
And Oklo's specific tech is what sets them apart from the legacy nuclear industry. They aren't building those sprawling multi-billion-dollar thermal plants.
No massive cooling towers here.
Right. They are designing fast-fission, small modular reactors, SMRs. And the crazy part is, these uniquely run on recycled nuclear waste.
Which is incredible physics. Traditional reactors use water to slow down or moderate neutrons to sustain the reaction.
But Oklo's fast fission does not slow them down.
Exactly. It uses fast neutrons, which have the energy to actually consume the long-lived radioactive isotopes found in spent fuel.
It's like if traditional nuclear energy is burning a log in a fireplace and throwing away the glowing embers, Oklo is taking those discarded embers and extracting a second, hotter fire out of them.
It's brilliant. It solves two massive problems at once, generates the immense power density for AI, and actively consumes the nuclear waste we currently spend billions trying to store underground.
And you pair that tech with this new government partnership, and it creates a massive regulatory moat.
Well, absolutely. Nuclear is heavily regulated. By being in a federal program with Microsoft and Nvidia, Oklo gets a huge early mover advantage.
Yeah, especially against pure-play competitors like X-Energy, who are fighting for that exact same market share.
But we have to be careful here. Hype by association is a dangerous trap.
Oh, for sure. It's easy for a stock to jump just because they got their name in a press release next to the biggest tech giants on Earth.
Exactly.
Which brings us to the reality check. I look at Oklo's 0 commercialized working reactors sitting with Microsoft and Nvidia. It feels like a garage startup pitching a revolutionary engine directly to an F1 team.
It sounds great on paper.
Right, but the real test isn't a press release. The real test is a power purchase agreement, a PPA.
That is the ultimate hurdle. Until Microsoft actually signs a 20-year PPA legally guaranteeing they will buy Oklo's power, this is a highly speculative science project.
But if they do get it,
If they secure a direct PPA, it transforms the company overnight, gives them a multi-decade revenue timeline, and validates the whole financial model.
But as of right now, those PPAs are totally unconfirmed.
Unconfirmed. The recent news only guarantees participation in the government program.
So because they don't have those contracts yet, we really need to look at the downside risks. The narrative is super bullish, but the fundamentals are precarious.
Evaluating a development stage company means staring directly at the financial health.
And Oklo is entirely pre-revenue. They generate literally $0 from electricity sales.
Operating at a complete loss.
Right. They have a trailing 12-month earnings per share of negative $0.8325, and yet the market gives them a $7.74 billion market capitalization.
Yeah, they are trading at a price-to-book ratio of 2.9343.
Which is wild for no revenue.
When a company with zero revenue has a price-to-book ratio near 3.3, investors are heavily pricing in future execution. They are paying a huge premium for cash flows that might not happen for years.
The margin for error at a $7.7 billion valuation is practically zero.
Non-existent.
And then there's the internal conviction of the leadership team. Over the last 90 days, insiders were net sellers of over 1.29 million shares.
Yeah, 16 insider buys compared to 51 insider sells.
If the executive team knew this massive federal initiative with Microsoft and Nvidia was coming, it is pretty concerning that they spent 3 months dumping over 1 million shares.
It looks jarring, but we have to contextualize how startup compensation works.
Okay, fair.
For a company that ran up to nearly $194 a share, founders are going to take profits. Their wealth is totally tied up in illiquid equity.
So it's just standard practice.
Often legally pre-scheduled, yeah. They are securing their personal finances after years of work. It doesn't necessarily mean they lack faith in the fast-fission tech.
So it's less about abandoning ship and more about taking capital off the table after a massive run.
Right. The insider selling is a data point, but it's not the primary bear case. The actual systemic risk to that $7.7 billion valuation is execution risk with the Nuclear Regulatory Commission.
Oh, the NRC. The sheer timeline of nuclear regulation is intense.
The lead times just to get a novel reactor design approved can stretch for years. And that's before you even break ground on construction.
Plus, building a novel reactor means establishing a whole new supply chain for specialized parts that don't even exist at scale yet.
The real danger is what happens during those regulatory and supply chain delays. Oklo still has to pay its top-tier engineers.
They got to keep the lights on.
Exactly. And with zero revenue, the only way to get cash is raising more capital.
Which almost always means issuing more shares.
Yep.
So if the regulatory process drags out for an extra 3 years, they continuously print new shares to survive, which just dilutes the value for current investors.
Your slice of the pie gets thinner and thinner with every delay.
Which is why traditional Wall Street is keeping a cautious distance. Truist Securities recently initiated coverage on Oklo on July 15th, 2026.
And they initiated with a very neutral stance.
Right. When a major bank takes a neutral stance on a speculative tech stock, it means they see the potential, but they refuse to stick their neck out until they see actual execution.
But it does put Oklo on the institutional radar. The big financial institutions are actively modeling this company now, waiting to see if those PPAs actually happen.
So bringing it all together, the fundamental outlook shows a company with revolutionary tech, a massive AI catalyst driven by global tech giants, and the severe execution risks of a pre-revenue startup burning cash.
Ultimately, the data scores Oklo a 7 out of 10 on the bullish scale.
But the critical nuance is the time frame, right? The data frames this strictly as a speculative 3 to 6 month swing trade.
Entirely based on near-term momentum from the government program in anticipation of contracts.
So this is explicitly not being presented as a safe multi-year hold.
No, if you ignore for 5 years, you expose your capital to the full brunt of NRC timelines and severe dilution risks. It is a momentum play.
Which brings us to why you, the listener, should care even if you never trade a volatile startup.
The macro picture is fascinating.
It is. The scale of AI's physical footprint is rewiring our infrastructure. Companies historically built on software and the cloud are now relying on experimental nuclear reactors just to keep servers from going dark.
The boundless digital world is crashing into the hard limits of physical energy generation.
It really forces you to reconsider the future of these hyperscalers. If global AI growth literally requires new nuclear power plants running on recycled waste, will the major tech companies of tomorrow effectively have to become the world's largest energy and utility companies?
Just to ensure their own survival. It's a crazy thought.
It definitely is. Well, before we wrap up today's Market Pulse Daily, just one more quick reminder about VIP Algos.
Yep, the affiliate link is in the description. Again, it is for educational chart analysis only, not financial advice.
And as always, trading involves risk, so be smart out there. Check out the affiliate disclosure below. Keep digging, everyone, and we will see you next time.